Hey there, YouTube family. Welcome to the Stocks with Josh show. I hope you guys have been having a restful weekend, but we're getting to the point where we've got to put our mind back on our money. I want to talk about the markets and the strong sell-off that we saw right before Christmas. Bank of America came out with a report showing that we had the largest outflow of money from stocks for the week leading up to Wednesday. A total of $42 billion worth of stocks were sold in that week. So what does that mean? Is this an indicator that we're getting ready to go right off the cliff as soon as we get into 2023? Not necessarily. It was likely the response to a terrible year in stocks. Wide-scale tax loss harvesting. This is where you sell your stocks to take a loss to offset capital gains in other areas. You do it right before the end of the year, and I think largely this big move that we saw was in preparation for tax loss harvesting. So now, going into 2023, I'm also focused on reorganizing my portfolio. I also want to cut the losing, underperforming stocks, and I want to load up on best-of-class stocks that are outperforming their peers. Today, I'm going to review with you guys some of my long-term investment strategy for my value stock, recession-proof portfolio. I've been spending more time on it, re-examining the charts, looking at these more carefully. I'm going to make some changes to some of the plays that I've given you in the past. I'm going to briefly touch on them, and you're going to see a number of videos about these value stocks leading into next year because I'm focusing on that right now, a little bit less on my swing trades. You guys know I'm in some profitable swing trades. They've been printing me money, but I also want to, that's the short-term wealth production, but I want to keep an eye on my long-term wealth production. That's my retirement account, and that's what these videos are going to be about. As a reminder, this is not a suggestion for what you guys should buy, sell, or hold. This is a dialogue, a conversation that we have as a community. It's educational, and I want you guys just to do your own due diligence, but remember that there are scammers in the comment section. They're always trying to get you guys to DM them. They use my name and my picture, and they're trying to get you to DM them on WhatsApp, Telegram, and Instagram. They're trying to get you to send them your hard-earned money. We're trading as a family. I appreciate you guys who have already hit the like. If you're new to the page and you want to join a strong community, we've got that. Hit the subscribe button and the all notifications on that big YouTube bell and join the Stock Josh family here and over on the Moomoo app. This is only a couple more days left to get the Moomoo offer. It's their best offer. These guys are the fastest growing retail trading platform, and they're offering the most. They're offering the most to you guys with 20 free stocks, the opportunity to win $60,000. They've got free level 2 data. They've got the stock screening app that I use every day to find stocks that are trending and moving faster. They've got the 8 order types to help you protect your capital and also lock in your profits. They've got the Stock Josh family chat group where we spend a lot of time talking every day before the markets open. We're feeding off of each other, coming up with plays, sharing ideas. People are making money. It's been a great group to be part of. I enjoy it, and I know that the people that are in it enjoy it. Get the Moomoo app. Start your investment journey today. Get those free stocks that they're offering before they close up that deal by the end of this year. They're trying to use up their marketing budget and gain as much market share as they can in 2022 before the year closes. So get that offer and come join us over on the Stocks with Josh community page. Okay, I want to start off by reviewing the Bank of America play, ticker BAC. These guys have a market cap of $260 billion. They had a 52-week high of $50, but today they're 42% down, sitting at $32.42, I believe. Their PE ratio is 10, and in the banking sector, the average PE ratio is $13.50. The S&P 500 average PE is around 20 for perspective. Their closest competitor is Chase Bank with a PE of 11.03, which is slightly higher. These guys are a dividend payer with a yield of 2.71%, and 61% of the 28 analysts call Bank of America a buy right now. 39% call it a hold, and 0 are recommending it as a sell. Now, I've said this before, that a lot of people got into the banking sector way too early. They got into it because of the narrative that banks should see superior earnings due to the higher Fed rate. Now, I've wanted to get invested in the banking sector, but I was patient and I waited. Patient hands get filled. I have strategically waited for the right price before beginning my accumulation phase. One of the fundamental reasons that I like Bank of America is because of their exceptional digital adoption of services and crypto and their appeal to younger investors. They're looking ahead at the growth of market share. This is helping them get a hold of the younger generation who are the future bankers who are going to do the investments and take the loans. These guys are the second largest bank in the U.S. Chase is the largest, but in my opinion, Bank of America is gunning for that number one spot. In October, Bank of America made a low to $29.71. Now I want to talk about long-range support and resistance. If we look at the strongest area of historic support on the chart, going back to 2017, and hey, the market is time traveling. We are going back in time to when stocks were priced before all the spending and all the stimulus money. That's where the market is resetting to. So if we go back to Bank of America in 2017, we see that the greatest price range of support is at $26. Back in 2003, Bank of America reached a high of $53. And then in 2009, in the Great Recession, it fell over 95% to $2.50. That's amazing. At that time, there was this absolute panic and fear that all banks were insolvent because Lehman Brothers, a massive lender and bank in the U.S., they were actually the fourth largest bank in America. They went under because they were insolvent. That bank was 164 years old, and it shocked everybody. It shocked Wall Street that they could even fall apart, and they did, and it caused all the other banks to suffer. It was kind of reminding me of where we're currently at in crypto. So Lehman Brothers was sort of the FTX that was super big and solid, and nobody thought it could fall. And when it fell, it cast a negative shadow on all of the other banks. As a result, Bank of America got absolutely slaughtered, smacked down to $2.50, and it's been on a journey since that time of slowly recovering. It hit a high of $50, and then we've entered into this new economic environment, and it's begun to pull back. The question is in the recession of 2023, how will Bank of America perform? I gave in the past my buy range was going to begin at $32 and it would be all the way from 32 down to 28. I gave that when Bank of America was at $37, and so we were patient. But I've been watching the stock, I've been analyzing it some more, and if there was a stock apocalypse in the first 3 months of 2023, I've become more convinced that it could go as low as $26, where we would see two ranges of historic support meet. And I think it would find a lot more support at that point. Right now, that's 17% below where we're sitting at $32. And so I've been thinking about this. I've decided to revise my game plan on Bank of America, and I'm going to tighten up my buy zone. I think Bank of America will go lower. Now, this is a long-term buy. It's not a swing trade, but getting into the right entry zone is super important for profitability. We could climb to $33 or $34. We did get a little bounce off 32 like I predicted, and we could get up to 33, 34. But when we do, I think I'm going to cash out and I'm going to let it go down. I might even buy a put at that level and write it down to my more ideal entry. So I'm not selling what I have right now. I'm going to wait and see if I can profit from it a little bit more, and then I'm going to let it go down so I can load up at a better price. Now, one thing I want to remind everybody regarding my trading. First of all, the trading that I share with you guys, it's my trading. It's what I'm doing with my money. And so if I shift or change a plan, I want to let you guys know. But again, I'm doing this because this is how I think I'm going to make more money for me. And don't be surprised if you hear changes like this, because you have to be fluid. You have to be willing to make changes and sometimes even cut losses. I'm just going to quickly say that the absolute number one problem that all retail investors have, I know it because I had it in the beginning of my trade journey, was to cut losing stock, to let them go. It's why I came to you guys and talked to you about NEO, which is perhaps a good company, but it's under a lot of pressure. I told everybody that it might cap out above $13, that was sort of a final call for those who might consider selling it, and that it would then fall, which we've seen a lot of that. I also mentioned AMC. I said, hey guys, if you can get out at $8 or $9, it's final call to get out of that stock. Otherwise, you're going to see it between $5 and $3. Those predictions are coming to pass. And my only point is don't get emotionally caught up and tied up into stocks. Be willing to make changes. That's what I'm doing. I've spent some time on the charts, and I'm going to let this go up a little bit for a profit. I'm going to cash out, and then I might buy a put to ride it down, and I'm looking at re-entry between $28 and $26. I'll keep you guys posted. I wanted you to be aware of it right away. Okay, I want to briefly cover some of the other value plays. I brought Americo U-Haul, ticker UHAL, to you guys. I told you that it was on my watch list, that I had an ideal buy range of $56. I want to change that to $53. I'm still watching it. I'm still learning the charts on this one, and there might be some revisions, but right now I'm looking at taking a position at 53. When we get there, I will let you guys know when I get in. It's just run up a lot because I think other people are having the same view that I had, that it's potentially going to do very well in a recession, but we want to try to get it at a great price. We don't want to chase it, and it's possible that we might miss it. If it takes off from here, I might not get in it at all. It is, though, a great recession play. I'm still liking VFC. I gave the target of between $22 to $21 for that, but I will also keep you abreast of any changes. Alphabet, Google, I gave the target. I told everybody at a 120 it was coming down to 92. I'm still at the point where I'm accumulating that between $100 and $80. That's a very long-term play. I've been in it, so I'm DCAing right now. And then I want to cover with you guys PayPal. PayPal is at 68 bucks, and it's taken an absolute beating in the last year. It's dropped 79%. It used to be $310. Man, had it taken off, but it's also fallen. The bigger they are, the heavier the fall, I guess. June's low was $67.58, and it made a new low in December, hitting $66.39. It hit that because their earnings came out in November, and the CEO gave a future lower revenue forecast. And I've been saying it to the retail community all the time. Stocks only go up in value when the earnings will increase from quarter to quarter to quarter. That's why they fall before a recession, is because the investors are recognizing that they're going to enter into a period where the earnings may decrease. Stock does not go up in an earnings decrease environment. We always need to keep in mind, it doesn't matter how great the story is, doesn't matter whether the technology is going to change the world. If they're going to make less money 3 months from now, the market will not reward the stock. The stock will fall in that environment. And the only time the stock will reverse and begin to go back up is when the market participants believe that the earnings will begin to be better from quarter to quarter to quarter. That's what will drive the stock price up. We see that with Tesla. People are fearful of Tesla. I saw an email, one of the people in the community over on the Moomoo app shot a picture of a screenshot that they got from Tesla saying that, just trying to cut prices and offering deals to come in and buy a Tesla. I made a video a month back and I said, listen, if Tesla begins to cut prices, commoditizing their products, it's going to send a terrible message to Wall Street and the stock is going to get beat up. And it was a perfect storm because we saw that the company didn't have Elon's attention. We also saw that he was selling stock, which led everybody to believe that it was time to cash out. I'm going to be more incentivized to buy Tesla when it drops below $100. As of right now, I happen to be in a call play. I got in off the bounce of 121. I'm sitting just a little bit above it, slightly in the profit. I'm hoping for a bounce when the market's open, but it's possible I could take a hit on that. My trade range for that was 121 to 129. It's a short play. If we get back up to above 126, 127, I will probably take a short position and go down from there. Still going to take it day at a time. You get those updates from me in the Stock Josh family chat group. That's where I can give those updates. All right, back to PayPal. These guys have a PE of $23.16 as of December 23rd. The value metrics show that PayPal is potentially undervalued right now and that they may outperform the market in the coming months with good earnings. PayPal's biggest competitors are Stripe, which is privately held, and Square, which has a negative PE of negative 65. Block, which is Square, has gotten a lot of attention recently as they've also dropped 80%. These guys are trading in a range between $84 and $34. And I personally believe that there's an ideal put buying or shorting opportunity on Square with the potential of a 100% return. I'm looking to take a short position on that. If we could get a move up to my target short price, which would be $68, where I will ride that stock down to potentially 100% return. That's one that I'm watching. I know I'm giving you guys a mixture of information on some of my value stocks and some of my short plays. I just wanted to cover some stocks with you guys today and share with you some of the research that I've done over the last 24 hours. I hope you guys are having a great day. I will be in touch. I'm kind of on vacation, so I can't pull away from my family too much. I'm enjoying so much time with them. I hope you guys are enjoying your family. Again, if you haven't hit the like for me. Join this community. It's a great community. I hope you guys are having a blessed holiday. Take care. We'll talk to you soon. Peace and blessings.